the cathartic deleveraging lows have happened. And I will say in the crypto markets, which we'll talk about later, that has happened. I think we've seen the lows, and that was the cathartic kind of deleveraging of the entire crypto ecosystem.
Hello and welcome to the Daily Crypto. Perhaps the biggest question on every investor's mind is whether we have seen the bottom or not. Mark Yusko is here to tell us exactly that, so keep watching this video till the end to find out.
But that said, that doesn't have to happen, and it may have already happened. And if that's the case, then there probably is some window of opportunity to start accumulating good companies at low price. Because there are some good companies selling at low prices. The problem for me as I look at the markets, there's still a whole bunch of really bad companies that are still around, right? I mean, 40% of, I think I have this right, 40% of the S&P 1500, right? So the top 1500 stocks can't even service their existing debt. Forget paying it back. Wow. They could never pay it back, but they can't even cover the debt service. And in a rising rate environment, that's not going to get better. It's going to get worse. So I do think we need to let a few more of those companies go away. It's like, oh, why are you always rooting for recession? Like, I'm not rooting for recession, but I don't fear recession because recession, like winter, is necessary.
There are still plenty of useless companies and projects that need to be flushed out before we can witness organic growth once again. He says that a recession isn't bad, instead, it's necessary because it gets rid of all the excessive leverage that's holding the economy back from growth.
The cathartic deleveraging lows have happened. And I will say in the crypto markets, which we'll talk about later, that has happened. I think we've seen the lows. And that was the cathartic kind of deleveraging of the entire crypto ecosystem. The problem for broader equity markets is the amount of leverage in the system, margin debt, is still the second highest in all of history. And so there's still a lot that could get unwound if we get a kind of September, October tough period, like is normal. The old adage, sell in May and go away and don't come back till Labor Day, actually, started in the UK and had to do with horse racing or something like that. But basically, and look, the Europeans, although can't call British Europeans because they're not, but the Europeans do August right. Everyone just leaves and nobody even pretends to work. But post Labor Day in through October has always been a really tough period for markets because people are coming back to work. They're looking at the stuff going, ooh, yeah, those numbers don't look good.
It's possible that we've already seen the bottom for cryptocurrencies, according to Mark. He thinks that the market will continue to rally from this point and we may never see 17K again. Historically, this time of year has been bad for the financial markets as people are getting back to work and realizing that the economy has deteriorated quite a lot.
We have the truth net. What's the truth net? The truth net is blockchain technology. All blockchain technology is, all it is a ledger that instead of being private and owned by centralized companies like Microsoft or Amazon or whoever, and existing in CPUs in a server in the cloud, now can be open, public, owned by no one, right? So it's a permanent source of truth. And it displaces the need for private databases. So it's just a database that's cryptographically secure, and that was the innovation. And so blockchain technology's use cases, one is Bitcoin. Bitcoin is a blockchain. It is a perfect store of value. It's basically digital gold. Gold, the only money in the history of the world.
Blockchain technology is going to revolutionize the financial system as we know it. One of the biggest applications of the blockchain is Bitcoin, which is completely transparent and secure. Mark goes on to say that it's digital gold and is a perfect store of value.
Can create money out of thin air. well, if you do that, what happens to the value of it? Well, think about it. When I was growing up in Seattle, right? I ask people all the time, what's the lowest price you remember for a gallon of gas? Mine's 31 cents. Totem Lake, right? 31 cents, gallon of gas. Was out in California visiting my son. I paid $4.31 for a gallon of gas. It's the same gallon of gas. It does the exact same thing. Produces the same amount of heat in the car. It's actually a little less because it's got ethanol in it now. Why am I paying $4.31? Well, it's not because the gas got better. It's because the money got worse. And think about it. If I have $1 trillion sitting on the table in front of me, and you, the Fed, print another trillion, what happened to the value of that money? It just got cut in half. And here's a stat people don't believe. In the last 2 years, the Fed created half of all the dollars. Anyone remember why we call it the dollar? Because we stole it from the Rothschilds in the Netherlands, called the dollar. And so now we have the dollar. And in 248 years of the Republic, okay, half of all the dollars that have ever existed were created in the last 2 years. So the value of that dollar keeps going, oh, Mark, no, the dollar's going up. DXY is strong. No. DXY is up because the yen and the euro are crashing harder than the dollar.
The Fed has way too much power because they can literally print as much money as they want, whenever they want. In doing so, the dollar continues to lose its power and will collapse one day.
Called a descending triangle. And it's really simple. So you have this base level of support, and the price will fall and it'll bounce, and it'll fall, but it'll bounce a little less, and it'll fall and bounce a little less, and it'll fall and bounce a little less. And eventually you have this descending triangle, right? And when you get to the very point, you get two choices. You can either break out and go back up, or you can finally break through, and it's like super fast. And so I tweeted out on the Thursday before Father's Day, look, the longer it stays at this 30,000 level, the more likely we are to break down and hit 15, kind of like we did in crypto winter in 2018 in November. And sure enough, over the weekend, we went all the way down and hit that. Now we didn't hit 15, we hit 17.5. So call me a liar. But from that point, now we've made the reversal, which is we've made this series of higher highs and higher lows. Well, now we're pumping up against this 24 level, and we've got an inverted ascending triangle the other way. And to your point, if we break out of the 24, there's a lot of upside on the other side.
Mark says the real test for Bitcoin is to break out of the 24K area, because if this happens, we'll be in the middle of a crypto spring and huge moves can be expected.
Before 2009, I would have said gold, because the only true store of value over a 10-year period is gold historically, and now Bitcoin. Now, and because it's a desert island, I don't have the ability to influence the growth of some business. So if I could pick a business that I knew was going to grow, that would be a better investment, right? You think about Amazon or Facebook, and I do think there are going to be the equivalents in the blockchain world in Web3 that, a decentralized social media. That's going to be big. I mean, it's going to be huge. And I'd love to have that, but I don't know which one that is yet, whereas I'm pretty sure Bitcoin is the winner for digital gold.
If Mark had to choose between gold and Bitcoin 14 years ago, he says he would have picked gold because he didn't know much about Bitcoin at that time. Now that he has great knowledge about Bitcoin and blockchain, he says that Bitcoin is digital gold and it is the future. We hope you learned something valuable from today's video. Do you think Bitcoin is better than gold? Let us know in the comments below. Don't forget to like this video and subscribe to our channel to keep watching videos like these daily.